Hello everyone and welcome back to Boss Concept. Today we'll be talking on candlestick pattern. What is a candlestick pattern? It's simply a method of reading price charts. You can actually read it based on four things. It's useful as an entry trigger. So how do we actually read a candlestick pattern? Let me share with you. So when using candlestick pattern, they're usually red or green candles. It could also be any color, but mostly it's either red or green candles. For example, where price or market opens at this low. This is the low of the section, the highs of the section. This is the level. This level here is where price closes. The green color portion is what we call the bottom. And for the red candle, it opens at this high. This to bear in mind for the closes here. We could also call it higher lows. Why? For the red candle, it opens at the highs here and closes at the lows here. Could also be called lower lows. So this is how you actually read a candlestick chart or pattern. So moving on, I want to share with you how we actually interpret this. There are two things we want to pay attention to: the body and the body relative to the wick. The body here tells you who is in control. That is why the market is open over here and closes near these highs. The upper wick is a sign of rejection. And you can see rejection is quite smaller. That is why the wick is quite shorter. So moving on to another example over here, you still have a body, but notice the body is much smaller compared to the wick. This is telling us that the bias opens at this very low and closes at this level here. However, if you look at the wick, it is much longer compared to the size of the body. This tells you that there's a strong price rejection in the market. At some point in time in the market, the price was actually trading at this level here, and sellers came in and pushed the price downward and closes at this high. So this is telling you there's a strong selling pressure over here. So this is what you need to pay attention to trading candlestick patterns. Pay attention to the body, pay attention to the wick, pay attention to the body relative to the wick. Let's have a look at three of the most popular candlestick patterns. They are usually reversal patterns. They're really useful. It serves as an entry trigger. So the first one here is what we call engulfing pattern. Price opens at this level and closes near the lows. Then the next candle opens at this level here. Buyer stepped in and pushed the price way up and finally closing near this high. So this is a bullish reversal pattern. Others knows it as bullish engulfing pattern. The second one over here, notice buyers were in control over here and closes near the highs. The next candle, sellers took control, opens near the highs and pulls back the price lower and reversal. So this is a reversal towards the. So the next I want to share with you is a hammer and a shooting star. So the next I want to share with you is a hammer and a shooting star. So the price opens over here. And at this level over here, then a long wick. That is how we have this long wick. They came in and pushed the price down all the way down to this level, to the selling climate. So the buyer stepped in and pushed the price upward higher till it closes near the highs. This over here is what we call rejection of lower prices. And just the opposite is shooting star. The price opens here. Buyers were in control, push the price towards the highs, Then sellers stepped in and took charge and pushed the price finally towards the lows. And just the opposite, this is towards this high. Buyers pushed the price towards this high. Then the sellers took charge, pushed the price towards this very low here. This is what we call hammer and shooting star. So moving on, morning and evening star. Again, it's another reversal. Sellers were in control. Again, it's another reversal pattern here. and closes near the low. The next candle is what we call a dodgy candle. It's an indecision candle in the market. It looks like a cross. The third candle is where the buyers stepped in, opens over here, and closes near the high. This is actually a bullish reversal pattern, morning star. Evening star, just the opposite. As you can see over here, buyers were in control, opens near the lows, and closes near the highs. Then we have this indecision in the market where the buyers and the sellers were at equilibrium. Then sellers finally took charge, opens near the highs, and closes near the lows. This is why we call this an evening star. So with that being said, a recap, candlestick is a method of reading price charts using the opens, highs, and lows. It is useful as an entry trigger also. These are just few of the candlestick patterns we're gonna go through. Just want to share the few common ones. There are more definitely. If you can read this pattern, you can read any candlestick patterns. The three main things I want you to note: the body, the wick, the relative to the wick, the body relative to the wick. See you in our next video.